All right, let's head now to the Money Desk. Devin Murugan joining us. So, of course, you know, tough times for consumers looking for the best deals possible when they go shopping. Pick n Pay, trying to step up and help consumers and their results out.
Yeah, and you can see which part of those stores are actually doing well. I mean, you're quite right. I mean, they're looking for the best bargains. It's tough times. Interest rates are up. Unemployment is the worst it's ever been in the country. So you can understand the economy. And we want to dive into Pick n Pay's results to see, Sally, what exactly is it telling us about consumer behavior at the moment? Well, strong set of results, as we said, from retail giant Pick n Pay today. But it's low-income boxer stores doing particularly well. Its share price, though, took a bit of a knock today, down about 8% or so. Just how are people shopping after COVID and its impact? Well, let's take that to the Pick n Pay CEO, Pieter Boone. He joins us now. Pieter, thanks indeed for talking to us. So more people at the tills, that's what you want to see. And your after-tax profits are up more than 52%. It does come off a low base, though, because last year you were dealing with that July unrest and liquor restrictions. What do you make of your showing today?
First of all, I think it is a decent set of results for the first half. Of course, impacted as well, unfortunately. Load shedding played a role, but also still the consequences that we unfortunately bear from the civil unrest of last year. So extra security cost and extra insurance cost, and that had a total impact of 110 million rand for the first half. But overall, if you look at the set of numbers that we have shared with the market today, good growth figures of, yes, correct, relatively on a soft base. But I think you have to look at the underlying numbers. We shared with the market in May a new strategy. We started to execute that, decoupled the retail brand into Pick n Pay and Pick n Pay QualiSave.
Yeah.
There, especially within the revamped stores, we do see good growth dynamics, be it in customer count, be it in sales development, but most importantly, when it comes to the Net Promoter Score, which showed a double-digit uptick. Our Boxer discount model is showing a phenomenal like-for-like growth of 14.2%. And we're opening up new stores with a total plan of 61 for the full year. And that's going to be a record and fully in line with the plan that we shared with the market in May. Mm-hmm. So overall, I would say a decent set of numbers in a challenging environment.
And I wanted to talk about that, Pieter. You know, the focus on two distinct markets there, that lower income store under the brand name you spoke about, QualiSave, and that high income Pick n Pay chain. A few stores out already, but are you getting a sense that that strategy is gaining momentum? What are you seeing in terms of consumer behavior heading off to these two different stores?
Yeah. If we first of all start zooming into the Pick n Pay retail part of our business,
Yep.
Split the brand into Pick n Pay and Pick n Pay QualiSave. A total of over 40 stores have been revamped. And if you look at the sales dynamics of those stores, an uptake on average of 15% sales growth, customer count an uptake of around and about 20%. Basket growth as well, which is an important element of 3%. But more important, what we have defined as traffic and power categories, they are up respectively 29 and 24%. And that are proof points for me that strategy is working. And subsequently, we accelerated that because the original plan was only to do 10 stores in the first half.
Yeah. If I can come in there, I mean, you're dealing with a consumer that is struggling with high food, high petrol costs, inflation now at about 7.5% or thereabouts. How does Pick n Pay cushion that? Because when we last spoke, you said one of the strategies is bringing as much as you can, buying in bulk, getting that saving there, and then, you know, making sure the consumer then benefits from that point of view. What is Pick n Pay doing to actually sort of stave off the impact of food inflation globally and in your store?
I think we anticipated well already early in the year. Yeah. We started building up what I call our strategic initiatives from a buying perspective, especially in commodities already at the end of January. And we have been able to keep our internal inflation below CPI food inflation, meaning to say we have been able to pass on that competitiveness back to the communities and our customers that we serve. And that definitely paid off in the way we are being perceived from a price perception to customers, but also when it comes to the impact it had on our sales. And that is something we will continue to do, of course, buying smarter and buying better. And that is part of the strategy as well, be it for Pick n Pay as well as for our discount model with Boxer. And I think we are well prepared as well for the remaining part of the year, especially given the fact that we go into the year-end trading. And we all know Black Friday as well as the year-end festivities play a very important part for our entire sector.
I'm wondering how hard that is to try and cushion that effective inflation in recent weeks, particularly when the business sector, retailers in particular, hit with that double whammy, goods stuck at the ports because of the Transnet strike, and then you've had unbearable power cuts. How's that impacted Pick n Pay?
On the first part on Transnet, I think happy to report that 95% of what we source locally. So we don't have that exposure to that extent. And I think coming back to what we do import is we do have our warehouses full and ready for year-end trading in that sense. So I think that's relatively limited for us. Inflation is of course a question mark in that sense. We do see in the rest of the world a little bit fading off in the months to come. And my own prediction is that we are a little bit behind the curve in that sense. But we remain cautious, and that's something that we have shared openly and transparently with the market as well. We don't think that load shedding will go away, unfortunately. And that is of course creating extra impact to our business, given the fact that our stores are operating on generators, and we know that the cost of diesel compared to last year is up more than 30%. So we have to find mitigating factors in order to create more efficiency in our entire supply chain, that is from logistics, but also when it comes to store productivity, as well as in the way we manage the business from a support perspective.
Pieter, before I let you go, I mean, it's interesting what the chair, Gareth Ackerman, saying somewhat earlier, that government should allow the private sector to run these key infrastructure points like roads, rail, ports, just to secure the country's supply chains and help it fire on all cylinders. I mean, presumably your take is similar to that or not?
Yes, of course. I share the view of my chairman in that sense, and I think we as an industry and as a sector have a lot to contribute, be it from learnings that we've gone through ourselves, but also expertise that we have in our business. And that's also an invitation to the government. Please seek the dialogue and engage with us.
Where's the shortfall, though, Pieter?
Well, where the shortfall is, I think the shortfall is in different agendas. And I'm not a politician. I'm a businessman. I've worked in multiple countries throughout my professional career. This is a country with great prospects, but it requires a strong agenda where certain reforms have to take place.
Well, we'll leave it there. Well, thanks very much indeed, Pick n Pay CEO Pieter Boone. Thanks indeed for chatting to us.